Here, JB here. Hope everyone's doing outstanding. Tuesday, February 10th, 9:16 on this fine morning. Talk really quick about markets. Some names I'm looking at go from there. S&P futures in the green, bouncing around was slightly in the red at about 8 o'clock. Retail sales data came in pretty much flat. I don't think that was the reason for the little melt up. There's no spike, just like we found a bottom at 810 and starting to head back to the pre-market highs, which was 695.50 or so on the SPY. Yesterday's action, S&P closed up about 0.5%. Markets opened in the red, tested lows at like 931, and that was it. And then bounced into the afternoon, hit highs at 12 o'clock, and chopped around in a boring, tight trading range. Sometimes boring is good, especially what the market brought us last week. So I hate tight trading ranges because that means premium crush. Hopefully, we get a little. Well, at least markets can hold their ground today, and then maybe get up to 700 towards the end of the week. Tomorrow we have jobs report, right? So today's retail sales. Tomorrow we get January jobs data, and then Friday is CPI data. So certainly gonna be interesting. You already have folks this morning saying tariffs impacted the retail sales number this morning. I don't know how long this tariff um, conversation is going to continue. Maybe it does. I don't know. But they've been using that tariff conversation for quite some time. Back, a couple months ago, it's the warehouses were going to sell out of all the products they hoarded to protect themselves from the impacts of tariffs. Now, now all the warehouses are empty. So how is inflation not going bonkers? Anyway, take it with a grain of salt. I don't want to politicize any of my conversations. I'm not a fan of the tariffs, but I'm here to trade the market. So you got to be able to tune out the noise, and a lot of the noise was that the markets were going to tumble back in April, and they continue to use the same kind of story to rationalize their bearish spin. I don't know, but we'll see what tomorrow brings. Hopefully, the employment number, it could be weaker than expected. I think that actually be a good thing, and well, at least for markets, right? I don't want to see market. I don't want to see the jobs number be. It's not a good thing if people are out of work, right? Of course, I don't want to see that, but in regards to the market, again, I'm here to trade the market, so I can't control the data. What I can do is continue. I can control what I do with it. All right, so that's overall markets. Just also some things to know. You have this morning, right? One of those firms coming out saying commodities are trading bubble like have signs of a bubble, something like that. I'm like, where have these folks been? I mean, now you're going to talk about chime in on the commodities market that has been having these wild swings. Anyway, all right. So that's overall market. We'll see what happens here today. To me, I hope, and yesterday you saw day two of kind of like a bounce in the software names. I would have thought Salesforce would be a little higher. You saw ServiceNow. You have what's his name, the big Permable talk about ServiceNow being one of his Dan Ives, one of those guys talking about one of his names he thinks should be up quite a bit from the lows. I thought it would be rallying more yesterday. So that gives me a little pause with the market because maybe that was just a small relief rally Friday and yesterday, and then we'll have another continuation of the downturn in the software sell-off. I hope not. There was a little piece, I forget who posted earlier today, comparing the software sell-off to newspapers, right? To media, traditional media, right? People used to consume their media with newspapers and books, and you saw all those companies get destroyed, right? You saw especially some of these smaller localized newspapers, they've gone disappeared or been consumed or acquired or what have you. But I don't know if that's the best analogy for software, but we'll see. Hopefully we find some footing here today and markets can start to melt towards 700 on the SPY. I continue putting on a watch list. I'm open to downside, right? So we break 686 on a SPY today. If sellers come in, can't rule any kind of crazy, either just sellers selling or some kind of headline. I'll certainly be apt to get maybe SQQQ calls or some of the other names I've been looking on the put hedges, the Broadcoms, the Lam Research, ASML. All right, so overall markets, quick on individual names. First, obviously, I'll talk about Align. Another nearly 3% rally yesterday. It's one of those names, not the most liquid or volatile name. So I don't want to be in a spot where it closes down 2% today. It will just destroy the calls. So it started to rally yesterday. I took some more of my calls off for 200%. And then it's sitting there. My calls are up. I think it was close to 500%. And I look at the bid ask, and I think the bid was 150 and the ask was like 250 on the 195 calls. I'm like, let me just take some more off at the $2 strike, right? I go put the offer in, and all of a sudden the bid is 5 cents and the ask is $2. So it kind of shows you the market makers playing some shenanigans on that strike. So I just left it there, and then I got filled. And I think it was not many contracts, right? So anyway, so I'm just holding a couple more. If it continues today, I might look to get some strikes in the next week. The 205 and 210s look inexpensive to me, at least for how I look at it, right? The market might be saying, hey, this is priced perfectly. I don't think they are, especially if you look at the gap fill. 277 is gap fill from back in August. If you look at the chart, it looks like it's going there. And also, I take a look at some of these moves after earnings. It's almost like the market is revaluing a line, saying, "Oh, look at these earnings. The stock should not be trading at 160 bucks. It should be trading at 250. Let's start getting towards 250." If this is the start of that move, it doesn't matter if I have the 205 or 210s for next week. They're all going to be up substantial. They're going to be multi-baggers. So that's kind of the thought process there. The thing is not moving that quick. So if it does have continuation today, I'll have time to get in the strikes. All right. Sorry about that, folks. That's the line. Server Robotics, flat as a pancake yesterday. Unfortunately, the premiums are not going up in lockstep. Maybe today's the day. Good sign that it closed in a green. 200-day moving average 1127. It had a weird spike midday yesterday, and all the way up to the 200-day moving average. Then sold off from that level. Maybe today's the day it breaks through. Roku reports earnings on Thursday. One of those names that you would always hear me talk about trading calls into earnings, and this is one of those weeks I haven't. Maybe that's a sign that I probably should get in some strikes. You saw last earnings all the way up to 117. I think it hit more 114, pulled back. It did it also in the summer on its last earnings. One of these earnings is going to gap and go and not look back and not sell off. Maybe this is it. 200-day moving average sitting there at 92.18. I might get some strikes for next week. I was looking yesterday, the 115s, maybe the 110s, but if I can't get them cheap, the other possibilities, I add some today, look to close some in before they report, lock some in for free. Then the other names, I'll keep talking about Enphase and Solar Edge, so I'm blue in the face. All talk, no action. Maybe today is the day for action. Enphase sitting here at 50 bucks. And then Zoom. Take a look at Zoom today. Well, I would say Zoom today is not, it's pretty much flat as a pancake in the pre-market, but it's in the software sector, right? So if you use the premise that all the names in the software sector got sold off, indiscriminate sell-off, you would say, oh, well, Zoom should be down. Zoom is still up 11% on the year. And it kind of held up pretty well, or relatively well, considering all the other names taken on the chin last week. That's a good sign, right? Obviously, anytime it holds up in market turmoil, a name like Zoom typically would sell off. So to see it hold up and then see it trade up nicely yesterday, if it has a break over 97, I think it's 105 plus in the next week or two. So still my February strikes, I'll continue to hold those. I might look for other strikes. The whole backdrop, right? 30% of its valuation is in cash. They have $8 billion in cash. It's kind of like a turnaround story. And also has that Anthropic stake, right? So a $31 million investment is probably worth $2 to $4 billion right now. I don't think that's baked into the stock whatsoever. So maybe once the market starts realizing that, it starts to take off. So that's Zoom. And then the other basket of names I've been looking at for earnings plays, maybe HubSpot. It's not a name I've traded before. Inspire Medical, right? INSP. Take a look at this chart, the sleep apnea name. Some of the, I was doing some research yesterday. A lot of these names that have, they rely on reimbursements from Medicare or insurers. If you have a device that is a great solution for folks, right? People have sleep apnea, but they can't get approved or reimbursed. They're not going to get your product, right? Especially depending on the cost of some of these things. So that's kind of what Inspire. If they don't get patients who can get reimbursed for their solution, and I don't know if it requires surgery, that obviously the person's not going to use it. They'll find other methods for their sleep apnea, or maybe the doctor won't prescribe it. So because of that, it becomes kind of just subject to approvals, and I think that's some of the reason it's sold off. I don't know if that's an opportunity, but they report earnings this week. Oh, and then last but not least, Corning. And I remember trying to trade Corning as the whole retail side of phones shifted, right? And people talked about these LEDs or screens being different. I forget the different components that they were talking about in regards to like glass, not glass. But Corning's always been one of those in the middle of that argument, right? Or whatever. I don't even know what phones use glass, what or different, but I just know that's always been in the back of my head whenever I look at GLW. But supposedly now with this fiber optic thing, and I don't know if Meta hadn't. I have to dig, right? And there was a Wall Street Journal article a couple of days ago, and I just got to kind of like look a little more. But this almost looks like it might do a similar thing with SanDisk, where people don't realize it's opportunity, and then once they do, it goes bonkers. So, and I don't know if the Wall Street Journal article is going to put some eyes on it, and maybe I'm too late, but I'll be watching today. If you see me get some calls on GLW, you'll know why, and I'll do some more rants during the day. But interesting name. And that's it, folks. So have a great day. I'll be back on audio later.